Okay, I've got to wait for 10.
Okay, so money is always a topic that our directors are asking us about. And so today we're going to talk about one very painful money spot, which we can't really avoid. We still need it. But oh, hopefully Blake can help us a little bit because we're talking insurance. Carrie, Blake, help.
Legalized gambling. Let's do it. They're betting you're not going to need to use them. You're betting that you are. So we've heard a lot about how it's becoming a much tighter market. So we brought Blake on, who is one of the people who focuses on just doing childcare insurance, to tell us a little bit about the state of the union. But before we get into that, Blake, why don't you tell us a little bit about yourself so that the listener knows who you are?
I can do that. So we go back about, let's say 20 years. My wife actually worked in childcare. Worked her way up from teacher up to director, was the director at the center for probably about 4 years. And with that, we became friends with the owner. He actually wound up passing away, and his daughter was moving deep into South Texas. So the business wasn't something that she was wanting to keep. So she had approached us about possibly purchasing the school, and it was at a great deal. They were going to sell us the business for less than the real estate cost, as a, hey, you're kind of running this. We like you guys. Here you go. And the liability standpoint, my wife was scared to make the jump from director to owner. And I mean, what we knew to do, okay, great, let's call my current insurance agent. He couldn't make her feel comfortable about it, and just kind of went on and on and on, and finally had to pass up the deal. It wasn't something that she was willing to take the risk on. So that kind of got the wheels turning over time. And eventually I came in to do this, the insurance for child care, because how many people out there are afraid to make the jump from director to owner from a liability standpoint, or even know where to go from that? So I figured
Okay,
there's more people out there.
wait. I got a question.
Okay.
Okay, so what do you mean that your agent couldn't make her feel better? What does that mean?
So we call our home and auto agent and was like, hey, this is something we're looking at. Kind of, can you help us? He's like, I could probably find you coverage. And she's like, no, like, hey, if XYZ kind of, if these things happen, am I going to be okay? He's like, I really don't do a lot of this. All he could tell us was, we can get you insurance. But insurance that's a big, broad word. I mean, can you insure it correctly? You see the horror stories, you see things in the news. I mean, we're under a microscope in the childcare industry at all times, I feel like. And that kind of, nobody could make her feel comfortable. If this happened, you're not going to lose everything. So she
Wow,
just,
what a great insight for you to come in and now be able to help all of us, because you've been there and you truly can say, I've been there, I've done that, I bought the t-shirt.
yep.
And a whole bunch of them and a lot of koozies and pens and pencils. No.
But in hindsight, I look where we could have been had we made this move 10, 12 years ago.
Absolutely.
Yeah.
And, I was the crazy person who was like, no, I'm doing it. And then kind of bullied my insurance agent into finding what I needed. I was like, I need this, 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 and this. But most people don't grow up in a family like mine where they have insurance agents as virtual godfathers.
Mm-hmm.
And so grow up knowing a lot of that. And I think that's a huge problem for the directors and the owners, is they don't know the language.
Yep.
Well, and I think even what Blake even started with, which is that we don't know who to call. So, Blake, we've got you on. You mentioned that you started your story with calling your local person. Why would I go to somebody who is maybe more of a broker format than just my neighborhood person?
I mean, you look at the situation that, let's say, we're in today. A lot of people, for your personal insurance, you have State Farm or Farmers. They no longer write childcare. So when you go through a captive like that, they only have one option for you. I like them from a home and auto standpoint. I wasn't a big fan of the way they wrote their child care insurance because we're trained to look at a certificate. Our certificate says we have $1 million of general liability. We're not going to claim general liability. What's going to happen in the schools is an abuse and molestation claim. Well, if you go back to any old State Farm or Farmers policy, most of them only had $50,000 worth of abuse coverage. That's about the same as not having insurance.
So you used a term that I think we all know, but I think maybe the person listening doesn't, which you said, if you're talking to someone who's a captive, and that makes it sound like maybe they're under house arrest.
They are. They're under house arrest. The only option to have is State Farm, or only option to have is Farmers. You look out to a broker, we have a lot of different options to go, but even go deeper than that, it's not just any broker. Your broker has to understand childcare. There's not many of those out there. So you can go to your local broker. They might write a trash company, some contractors, 2 child care centers, a bank, all sorts of different stuff. So they know a little bit about everything. They don't know a whole lot about any one particular thing. And right now, the way the insurance is going, people are dropping off. There's a whole lot less options out there. What I'm seeing is most of the directors and owners out there that are looking at their agent for insurance, even if they are with a broker, the only option they have is Philadelphia, because every broker out there has Philadelphia. Well, now, if you're not a nationally recognized franchise, Philadelphia is not going to do business with you moving forward. That's the stance they're taking right now. So again, it's that everyday broker. Now they have no more options.
Yeah,
They're stuck. They don't know what to do.
So they can't help ABC Childcare. They can just help Kids Are Kids or Primrose or something like that.
Yes. And I mean, Philadelphia, they've been one of the staple insurance companies in this industry for as long as any of us can remember. I promise you that.
Yeah.
All
And then
right.
there's one specific for churches, or that has been typically for churches.
There is church mutuals out there. Now, they will do a lot of just schools. You don't necessarily have to be in with a religious organization. But the stance they're taking right now for all of you in Texas, they do not like us. They will not write property in the state of Texas. They will cover the rest of your business, just not the property side. So that's, again, another big company out there that has really shrunk their target audience to what they're really looking for.
So where do we go? You're saying that people aren't available and that people have pulled out. Tell us more what that means, what we need to look for. And I'm really excited. So I'm going to let the cat out of the bag. We've got Blake doing a second episode, so he's going to tell us more about what we need. But right now he's going to help us with what do we have?
Okay. So kind of like where we started, State Farm and Farmers are no more in our industry. Another national recognized carrier that has pulled out of the child care space is McKee Risk Management. They've been a big player all the way around. Probably about 6 years ago, I think they saw the writing on the wall with Texas. So we had a big meeting and they had wound up pulling out of our state. Fast forward 5-6 years down the road, now they have exited the entire marketplace. Now, hopefully at some point in time, they do come back, but where we stand right now, they are gone. So if we really look at what we have left out there from a national level standpoint, that I would say at least 47 states would have access to, we really only probably have about 2 carriers left. Now we do have some others that are regionalized. They may only do business in that 8 to 10 cluster state, a lot of the Midwest, Northeast. So you're still going to have, for those people up there, the regional stuff. You're going to get your West Bend, your Selectives, and your Utica. But for everybody really on the West Coast and then down south, we don't even have those options. So what it's done, since a lot of the normal carriers have pulled out, the scary thing that I'm seeing is the abuse and molestation is being harder to get the $1 million for. A lot of them are taking the stance of 100,000. To give you a good example, of an insurance carrier that most everybody's familiar with, Markel. Big company, they're nationwide. They've taken the stance now at 100,000, 300,000 for your abuse. Now, if you've been with them and you have the million, you're grandfathered in. Everyone else moving to them, but where their niche lies, 3 centers or less, 10 autos or less. So when you think about that in a growth mode, if you're at that 3 centers ready to go to that 4th, well, we got to have a plan on who's going to insure us, because once that renewal comes in, you don't qualify to be part of their program. You will get a non-renewal notice, and now we're going to have to figure out a new game plan.
Could the owner who is at 3 centers subdivide into 2 different corporations so that they're both existing, and then add to one of those 2 corporations?
You
And still
could,
Martel?
you could file another LLC, get you another EIN number, set something up on the side. It may make it easier, may make it more difficult.
Well, I
It is an
remember you
option.
saying that it was harder if you're a new company. So I was like, if you're an existing program, you just have a new corporate name, maybe that's a way through. Trying to figure out a way for people who are in growth mode.
I don't know if there's a right or wrong. There are still plenty of carriers out there. I mean, there's lots of people out there that have that 10, 12, 15 centers. They're still managing just fine, but I can almost guarantee you all of those are with a child care specialist from the insurance standpoint.
Okay, so
Kate's
go ahead,
trying to.
Carrie.
We're thinking.
I'm trying, I have to figure out a tactful way to ask my question, so give me a second.
So while Kate is trying to come up with tact, so the question, we've talked about how your neighborhood agent who you see a billboard in town or whatever says, we're a small business, we'll insure your small business, that probably not the best option. Instead, look for a broker that specializes in childcare. We know that there's less than 10 of those that work nationally. How does the average center owner, center director decide which one of those to work with? Because we don't want you guys all trying to get quotes on the same center. If we've got 4 brokers working to get paper on the same center.
Well, that's where I think that's where a big myth in the childcare space lies. So let's just say, like you said, you've called 4 different brokers. They're all trying to work on basically the same pot of insurance companies. At the end of the day, if the first one of us that submits it to that company is the only one that gets a quote released. So it's not doing
so you can't, so there is no such thing as shopping.
No, if you have a true broker that can actually shop it right, then no. I mean, if I started shopping you, then you went to someone else, let's just say you're in Texas. Then you went to someone else, they're going to have to say, hey, we can't get a quote. All the markets are blocked, is basically our terminology of what it's called. That just means another agent has already submitted this school.
Okay, well, so that's really good to know. So, because I know that you hear people talk about, wanting to shop this or shop that to get the lowest price. This is a reason to use a broker, because the broker's doing the shopping, not me as an owner. I'm not shopping different brokers.
Yes, you're not.
I need to go to the broker. Okay.
50 different supplemental applications for 4 or 5 different people. We could knock it all out with one.
Okay. So we've got to find our broker, and they can probably Google, or we'll have Blake's information in the contact. And Blake can help you if you're in the United States. Are there any places in the US that you guys can't support?
No, we can write all states in the US. If I was roles reversed, if I owned a center and I was trying to contact a broker, I would ask them one question: what all markets do you have for this state? And if they couldn't just rattle them off one after another, they probably don't understand childcare.
What
Okay.
does that mean?
So
And what
what
answers should I
insurance,
be looking for?
what insurance companies do you have access to? If they start telling you stuff that you've never remotely heard of, that means they're going to put you in what's called surplus lines. And if you really look at everything, you're going to pay taxes and fees. If you cannot pay your yearly premium in full, you will finance it and pay an interest rate on that. It's not like the Philadelphias, the Nationwides, the Church Mutuals that just direct bill with the customer, no finance charges, no taxes and fees. So a lot of money is going out the window. And you just, if you haven't heard of it, it's probably not worth going with.
Okay. That makes sense. Kate, did you figure out how to tactfully ask your question?
Well, it was related to the shopping, and Blake kind of went there, and so I didn't have to come up with tact. But I do think so. One of the things that I want to kind of get our directors to think about, and you and I talk about this in other episodes, Carrie, is you have an advisory board, or you should have an advisory board for your business, whether it's labeled an advisory board or not. So you already have that lawyer, you have this insurance agent, insurance broker. One of the things that you need to do is, before you do anything, call them. Kind of like, so we've heard these stories, and so Blake, help others understand the stories of, I'm not getting coverage, and they think it's because of one thing. It's really because of another, and it's because our directors, the owners, are filing baby claims, for lack of a better term.
Okay. So the example that's been a hot topic here, I know where you guys are up here in Dallas, where I'm at, is catalytic converters being stolen. I mean, it's happening all over the place. What I've been seeing lately is talking to some new prospective clients. When I see what's called their loss runs, basically your loss history over the last 5 years, we're seeing where they filed a claim for a catalytic converter. After the deductible, they got $1,000, $1,200. Well, what they don't realize is now they take a chance of being dropped by their current carrier, and to go with someone else, I've seen it raise rates up to $10,000 a year. So yes, you got the $1,000 in your pocket to replace that, but over the next 3 to 5 years, it's going to wind up costing you 30 to 50 grand. It's not worth the claim. And talking with some insurance companies, and I'm glad you brought this up, they have looked at the childcare book of business against some of their other books of business. Now, granted, they're nowhere close to the same thing, but just from the auto and property side, a building's a building, a vehicle's a vehicle. No matter how you slice it, they are the same there. And they feel like the childcare industry is starting to use the insurance more as a maintenance policy, unlike a true disaster that it's intended to be used for. So now we're getting multiple small claims. It's like we're going to file a claim for anything we can, even if we can get $500 for it. Well, now we're having people dropped over a couple grand because they've made 3 or 4 claims. So the insurance company's like, I'm just waiting for the other shoe to drop. A big one's coming. So let's just part ways and we'll non-renew you and let you go somewhere else.
So you think that part of the reason that things were happening here in Texas were the baby claims, not so much the big billboards going up saying, was your child harmed in childcare? Call us and we'll get you $80 billion.
Yeah. No, I do. I think it's the little property things, the auto things. It's not Texas for sure. But we have everything. We've got your hurricanes, we've got your tornadoes, we have your hail. The last few years, unfortunately, we've had a lot of freezing pipe bursts. Like, if it can happen outside of earthquakes, I think we've had it in the last 2 to 3 years. But that's where they're looking at Texas is a property issue. Like I said earlier, that's why Church Mutual, I believe, put a moratorium. We'll write every line of business, just not property.
So that was something that I made myself some notes. When you've got directors and owners, because again, I think that the owners listen to the directors if they aren't already an owner, or if they're a business owner, they think they know what they're doing, right? So how can an owner or a director who has to work with an owner, get in the mindset that the insurance is for disaster. Because we're, like you said, we're in Texas, we get all of it. So where should they start to go? Okay, so it should be a claim of X and above, to not be that maintenance piece that you were talking about.
When we're looking
I
at
think
it from the State of the Union kind of perspective.
So my best advice I could give anyone, if you think you might have a claim, you're debating on claiming, call and have a conversation with your agent. And if the first thing they tell you to do is claim it, you might want to go find another agent. This is going to be it should be a 10 to 15-minute conversation realistically about this is what happened. We have a good idea as we're talking. We've done enough on the claim side that we got a decent idea what would the client get back from a monetary standpoint, and then have the conversation further. If we do this, this is what could happen over the next 3 to 5 years from a premium standpoint. Is it worth it? And sometimes, yes, it might be a 6-figure claim. Well, yeah, I mean, I need to claim that. But these things that are 1, 2, 3,000, it's going to cost you in the long run more than you're going to get. And I go back to just growing up, being a teenager in my early 20s. I was always beaten in my head by my parents. We don't claim anything. Like you need to make sure you physically cannot afford to just pay it and fix it outright, because you will pay more for your auto insurance. It's no different than it is today. I think just our mindsets have changed on what we use it for.
Well, I think what you just said is a mindset that I know a lot of people don't really get. And that's why I was asking if there was a threshold. Like if it is over, I'm going to go with 20, right? If it's over 20, okay, that's probably a safe bet.
So over $20. $20. Okay.
No, 20K, 20,000.
It's one of those deals that some centers may be in the position they can afford to spend that 15 to 20, 25 grand. Others may not be in the financial position, and you may be forced into having to claim it. That's why I don't necessarily say there's a magic number. Okay. If you can afford to eat 25 grand on a claim, will you get your money back in insurance savings over the next 5 years? 100%. But can you afford it at the time? Money's tight right now across the board in the industry. And just to come up with an extra 20, 25K unexpectedly is a tall task to ask for anybody.
But it may be whether or not do you have to replace it or rebuild it or do it the way, like I'm going to use vehicles as a good example, right? So if a vehicle gets totaled, whether it's because of hail or some natural disaster, or just it was in an accident, it may not be worth necessarily replacing it right now. Like there might be other alternatives, right? Be creative.
It is. I'll give you a better option for up here in North Texas.
Okay.
Hail damage. Our hail contractors have gotten so good whooping up on the insurance claims adjusters that there's people out there, they've had a new roof every year for the last 3 years.
Yep.
Just because your roof is dented does not mean it's leaking and not functionable. But we're making $100,000 claims getting new roofs because we can.
Well, and because we have a salesperson who's telling us we need to.
It is.
Yeah.
If you don't have water rushing in your building, you don't have to claim it. It's gonna hail. Give it one more year, you're gonna get it again. Give it another year, you're probably gonna get it again.
Yeah, and if you're having this much trouble, go get one of those metal roofs. Don't have one of those rolled out tar roofs. At least have shingles. Rolled out tar, not going to get you very far. Sorry. Take off my construction hat. Sorry, I was a contractor for too many years. So is there anything else you think we really need to know from a state of the business, the childcare and insurance businesses matching up right now?
Yes, I'm going to give you the only piece of good news I can.
Okay, good. I like that.
Rates for workers' comp are not going up, and insurance companies are not leaving the marketplace, as well as your student accident policies. Those two things we can key on to stay inexpensive.
Yeah, I think the student insurance policy is the best investment in happy parents and a level budget.
And
the
you're
insurance
talking
market.
about your State Farm, your farmers. I would probably say the majority of those customers I've met, the student accident policy is the one they do not have because they don't offer that. And that's the cheapest thing you can buy. And to me, the most beneficial because you can put $200,000 on every child. So if they get hurt, we don't have to worry about did mom and dad lose their job? Do they not have insurance right now? The owner is not having to come out of pocket to fit the medical bill. I mean, we're talking $7 a kid per year.
And if you take
That's easy.
one kid in an ambulance, you've just paid for 100 kids worth of
Absolutely.
policy, because that ambulance ride is going to be $800. So you even saved $100.
Yep.
Depending on where you are in the state, it's probably double that. So, but yeah. And that doesn't include the staff time to go with that.
I said the minimum of $800. Or if the
Oh my
word
God.
didn't come out, it was in my head.
All right. Well, Blake, thank you so much. You guys come back next week. We're going to drop the second half of this podcast with Blake, and Blake's going to tell us what we really need to know and what we ought to be doing when it comes to looking at the insurance our programs truly need.
If you learned anything today, share the show.